concerned about that, but be more concerned about what is it that God has embedded in me. If you're a good writer, go ahead and start writing. If you want to write a book, go ahead and write a book. If you're good with IT, go ahead and build an app. Practice with your church. Practice with your youth group. Whatever it is that you think that you can do, use your church as the guinea pig. You know, I always tell people that we get this platform. If you guys had not invited me on this is a platform that you are giving me to be able to sell whatever it is that God has given me as a gift to you guys. And so use your church, use your resources, use your family as a guinea pig to, you know, build some of these things that you want to do. If there's something that you want to train on, you know, go ahead and start an online training course, record it, put it online, start selling it, you make money. If you're good with photography, go ahead and start selling some photography online. If you like to make flyers, that's something that's really booming right now. You can make flyers, create templates, and it's something that you don't even have to worry about. You've already created the template. If somebody needs it, they pay for it, you send it to them. You can do so many things. Etsy, Amazon, you can create your own site. You can do it. But passive income is something that we should all be working towards. That ties into entrepreneurship. And so we can talk a little bit about entrepreneurship. If you guys are interested, you can give me a call and we can talk about it if you have any sort of, you know, business ideas that you want to get into. But in order for you to be financially and, you know, create generational wealth, these are some of the things that you need to be thinking about now, because now that we're young, we can go ahead and start saving the little money that we can towards and investing those money that we have now. Because trust me, our salaries alone cannot sustain us. No matter how much you make, because as the more money you make, the more expenses you have. It's something that's mind-boggling. Like, it's almost like it's synonymous. As you're growing financially, your expenses tend to grow with you. And it's very unconscious, right? So if you're just relying on just your salary alone, then we will not be in the position to create generational wealth. Now, the next thing I want to talk about is spending. You know, how are you spending your money? Are you paying your bills and saving a little later? We talked about that. You know, I told you guys to ask yourself those 3 questions. If you are, what type of spender are you? You know, it's very necessary that we check our expenses. And so one of the things that my husband and I, we do very frequently is we will look at our bank statements, because now we're in a world where we are spending using our credit cards on a daily basis. So what you want to do is, at least on a weekly basis, you want to pull your bank statement and you want to look through it. Number one, the reason you want to do that is you will find that there are certain things that you're getting charged for that you shouldn't be charging. You shouldn't be getting charged for them. So that's a good way for you to save a little bit of change in that, from that perspective. Now, let me give you guys an example of what happened to me 2 days ago. I woke up and I went into my, I have a Western Union account. And this is not an account that I use frequently at all. I think maybe I've used it 3 or 4 times. But for some reason, when I woke up a couple of days ago, it's like, oh, let me check all of the different, you know, accounts that I have that I barely use. So I went on Western Union, and I realized that 3 days ago, somebody had charged my account $100. So they had charged it 3 times. And it hadn't reflected in my bank statement just yet, but it was showing pending on the Western Union. So when I called Western Union, the good thing was, because I had checked in time, they were able to cancel those things. Now, I don't know if that was the Holy Spirit that nudged me to go on there, but this was something that I was like, well, I need to do since I have some downtime. I need to go ahead and check all of these, you know, monthly subscriptions that I have on PayPal, all these things that I have. And so doing that, I was able to, you know, save myself that hassle of having to call my bank to file a claim on somebody, you know, frauding my account or whatever. I was able to do that because I made sure that I was checking those things. So it's very necessary that you check your bank statements frequently so you know what's going on with your money. Now, the next thing is, for people, I think one of the things that most financial, advisors will talk about when it comes to spending, the example they always share is like coffee. And, coffee is something, or buying lunch at work, that's something that, even though it might sound cliche, it is so true that if you don't catch yourself, you can easily fall into that trap of, oh, it's okay, it's only $5, or it's okay, it's only $1.50, or it's okay, it's only $2. All that money, it might not mean a lot to you now, but trust me, it adds up. When you're spending that much money, even if you're spending $1 a day, that's $30 a month or $31 a month. When you multiply that by 12, and you multiply that by 5, and you multiply that by, you get to a point where you're like, oh, this is money that I could probably be investing in, a stock. Because in as much as a cup of Starbucks coffee costs $2, there's a stock out there that is worth $2. So if you spend that $2 on Starbucks coffee, which Starbucks coffee is not $2, but if you spend $2 on coffee, that is $2 that you're taking away from investing that would be creating generational wealth for you. So think about what you're spending your money on. If you like coffee, then invest in a good coffee machine. You may have to, buy a Keurig for $200, but in the long run, it is something that is going to be worthwhile than you spending that money, anyhow, just because you don't think it's that much. Now, the next thing is also college. Now, I did a video on picking college choices or degree choices when it comes to going to college, and if you're interested in it, I can share with Thomas to share with you guys. But you want to make sure that whatever it is that you're spending your money on when it comes to college, when I say whatever you're spending your money on, your major in college, make sure that it actually makes sense. People would tell us, go into the healthcare system, go into the health, be a nurse, be a doctor, be a whatever it is in the healthcare. But you just want to make sure that whatever degree or whatever major you pick is going to yield you profitable gains when you graduate. Because if you're spending $50,000 on college for 4 years and you graduate and you get a job that's paying you $25,000 a year, I'm sorry, that is not a good investment, okay? So think about these things when you're making some of these decisions when it comes to your spending habits. Owning is always better. So in this time, if you're just now getting out of college, you want to go ahead and think about owning your own house. Think about owning your own property, owning your own real estate. Whether your parents already have a home and so you can move back in with them, you can always get a rental property and have somebody move in and help start paying off for you. Or if your parents are currently renting, then it's a good time for you to also think about how to save towards getting a home. And this way, your parents are living there with you, so they are paying a portion of the rent, or they're paying a portion of your mortgage that they would have ordinarily be paying in their rent. So this way, you're actually saving, and by the time that you're ready to move out and get your own place without your parents, they can still stay there and continue to pay it off for you, or you can rent it out. So think about all of these things when it comes to spending, when it comes to saving. I always tell people that you want to save at least 20% of your income. So make sure that whatever your take-home income is, you're saving at least 20%. Don't save 5%. Don't pay everything and then decide, okay, this is what this is how much I'm going to save. I have another video on when it comes to, budgeting and savings. And if you guys are interested, like I said, I will share with you. And lastly, when you shop on credit, one of the saving habits that I've formed recently is every time I go to the store and I check out on the receipt, it would tell you how much you saved. It would say you saved $10. As soon as I come home, I transfer that $10 into my savings account. because had it not been for maybe the coupon or the discount that they had in the store, I would have paid full price for it. So I try to use that so that I can also build my saving bucket by at least transferring a little bit of money, whether it's $10, $5, $10. Every time I spend money, I make sure that I do that. Lastly, when it comes to credit cards, one of the questions that I always get on credit cards is, okay, when it comes to credit cards, how much should I pay? Well, I say you always want to make sure that you're paying your full balance. If you have an outstanding balance and you can afford it, go ahead and set on auto pay and pay it off. If you can't afford it, make sure that you're not using more than 30% of your credit balance. So as soon as you hit that 20-25 mark, make sure you stop using that credit card, because that is also going to affect your credit. You want to pay off your debt as quickly as you can. There are two methods that you can use to pay off your debt. Some people like to see, they like to reward themselves when they pay off stuff. So when it comes to credit card and when it comes to debt payments, just think about what makes sense for you. If you like to reward yourself, then you want to pay off your lowest balance first. So if you have a credit card that maybe has $500 on it, then go ahead and work towards paying off that $500. Once you pay that off, then you can move on to the next, lowest balance on whatever else credit card or whatever else loans that you have, and pay it off that way. That's one of the ways that you can use to pay it off. Or you can target the ones with the highest APR. So whatever the interest rate is, whichever one has the highest, you go ahead and you pay that off until you're done with that, and then you move on to the next. Invest. Investments is something that is very, very necessary when you want to create generational wealth. Guys, please, as you're saving, the most important thing is you want to save first. Once you've saved, then you can start thinking about investments. Do not go and invest when you haven't saved. Do not go and invest when you are in a financial hole. Make sure that you clean up your money, you clean up your financial situation, you clean up your personal finance before you start to get into the investment space. Now, there are different types of investments. We talked about, real estate not too long ago, but there are different types of investment when it comes to bonds and stocks and, other things. So if that's something that you think that you're ready to dabble into, you can also let me know, and we can talk a little bit more on that and see how best I can help you. Now, I think I will stop there because I've been talking for a long time, and leave it for you guys if you have any questions.
Okay, so about the 401k, I need to know more about the 401k, the importance of the 401k.
Okay. Now, when it comes to 401k, there are different types, right? The most important thing that you want to know when it comes to 401k is your job. You want to know what your company is matching. So you can call HR, or you can even talk to some of the people who've worked at the company that you work at, and ask them what is the company matching when it comes to 401k. So if they're matching up to 10%, then you want to make sure that you're taking advantage of the whole thing. So when I say matching up to 10%, let's say if you put in 10% of your pre-tax income, the company will match that 100%. So they will also put in the same amount. So let's say if that money that you're putting in is $200 per paycheck, then your company will match that $200. So instead of you only putting $200, now you're putting $400. But what you want to make sure you're doing is you want to check what the cap is, and you don't want to do anything less than what the cap is. So if the cap is 5%, make sure that you're contributing 5% so that your company can match that 5% 100%. I hope that makes sense.
Yeah, thank you very much.
You're welcome. Any other questions for me, guys?
I have a question.
Mm-hmm.
My question goes towards the 401k. Actually, the number one question is, what will you advise someone that works and the company is not matching, but he still want to put money aside, for retirement? Will you advise the person to still go ahead for 401k? And the second question about the 401k is, let's say you're working and you also have a side business. Can you have a 401k for your business? Thank you.
Okay. All right. That's a really good question. So if your company doesn't match your 401k, I think most companies do. So you probably want to look into it and make sure that they do match. If only they offer a 401k plan. So if they offer a 401k plan, then go ahead and just take advantage of that because that's pre-tax income, right? That's saving you money on your taxes because you're deferring your taxes till when you retire, which more than likely you'll be in a lower tax bracket at that point. So it's always better to do the pre-tax aspect of it and put that money there. If your company doesn't offer 401k or you are not in, maybe you're not full-time and so you don't get 401k options and you want to get your own, you can go to, you can just search 401k online. There would be multiple banks that offer 401k solutions. So you could open an IRA account. There are different types of IRA accounts that you can take advantage of. And so just sit with them, call them, talk to them, tell them what your financial situation sounds like, and they will advise you on exactly what is best for you. So if you have your own personal business on the side, then yes, you want to go ahead and set up a 401k, open an IRA account, and start putting some money in there because that's also, you get a tax break for doing that. So when you go to file your taxes, you would receive a form from the bank which you are saving at as far as your IRA is concerned for the business. And then that would count against your taxable income whenever you're getting ready to file your taxes. I hope that answers your question. Did I answer your question?
Oh, I think you're.
Sorry, say that again.
I think she's not around.
Oh, okay. All right. Does anybody else have any questions?
I have a question about passive income and also so how does taxes play a role in like having a passive income or business and also investing?
Can you ask the first part of your question again? Sorry.
No, you're fine. So I know you mentioned passive income, like starting a business, and I wanted to know like what role does taxes play in that, and like paying your taxes and stuff like that, and also when it comes to investment.
Okay. So the role that taxes play when it comes to passive income is anytime that you have a business, remember that all your expenses are tax deductible. So I always advise young professionals, once you start making good money and salary-wise, to start a business on the side because what that's going to do for you is it's going to actually help reduce your taxable income with all of the expenses that you may have running that particular business. Now, from an investment point of view, if you have a side hustle or you have a business or you have passive income that's coming in, that's extra money that you're not working too hard for, right? Because you still have your day job and you still have your investment money, which is your passive income that's coming in. So you can take that money and start investing that money into, stock options or putting additional money into an IRA account or looking into other, bonds or other investment vehicles, or even start, doubling into, real estate, because that's money that you don't necessarily have to touch, right? So your passive income that's coming in, if you're getting paid for blogs or if you're selling courses online or maybe you have a side hustle that doesn't require a lot of, work that you have to put in, then you can take all that money and start using it to maybe get into an investment property or something, or collaborating with people to maybe get into buying like big real estate or whatever.
Okay, thank you.
You're welcome. Any other questions for me, guys? If you have any tax questions, I can answer that. I know I didn't talk much about taxes, but if you have any tax question, you can ask me and I can answer you.
I have a pretty general question.
Hello?
Please go ahead.
Oh, okay. So I have a question about student loans. Is it advisable to pay it off like once you graduate, or like you should just take your time and pay it off?
So I think it depends on your financial circumstance, right? So when it comes to student loans, if you graduate and you stay at home with your parents, you have that flexibility where you don't have to really contribute much at home. I would say go ahead and as quickly as you can pay off your student loans, because student loans is one debt that doesn't go away. I mean, people say, take your time, it's fine, it doesn't affect this or whatever, but debt is debt. But that's something you have to think about with your situation. Let's say, for example, you happen to have bought a house already, and so you're paying off your house, or maybe you bought a car, and so you have a car note that you have to pay off. So you have to compare the two, right? Obviously, your student loan interest rate is going to be much less than the interest rate that you have on your car note, or maybe the interest rate you have on your home, or the interest rate that you have on a credit card. And so in that situation, you want to make sure that you are paying off the one with the highest interest rate. So your student loan interest rate might not be that high. So you want to go ahead and focus on paying your credit card or paying off your card note versus your student loan. But you still want to go ahead and make payments on your student loans, because even if you defer it or you take a forbearance on your student loan, you still have to pay that money and you're still accruing interest on it. So you can set up a payment plan with them and go ahead and start making the payments. But just look at your financial situation. If you don't happen to have any debt outside of student loans, then I would say, yeah, go ahead and work on paying off your student loans. Once you pay that off, then you can start looking into doing other things with your money. I hope that makes sense.
Yeah, sure. Thank you.
Mm-hmm. I think somebody else had a question before you.
Yeah. My question is, do you have any suggestions or recommendations on resources just in general? I know for me personally, as much as I try to dabble and try to understand some of these financial things, it can be very overwhelming because there's so many different aspects.
Right.
But yeah, so my question is just, are there any resources? I mean, I know I've heard of like Dave Ramsey, but if there's anything that maybe you know of that may be free resources, whether it's on YouTube or different channels, I don't know, something to just kind of use as something you can reference.
So what's your name?
Patricia.
Patricia, okay. So Patricia, what I'll do is you can take my number from Thomas and you can give me a call and we can talk a little bit about exactly what you're trying to get into, and that way I can, direct you in the right direction as far as resources is concerned. So get my number from Thomas and let's talk offline.
Okay, thank you.
You're welcome. Any other questions?
Yes, I do have a question. First of all, I want to say thank you so much for going this knowledge into it. My question has to do with taxes. So often we hear that if we start a business, it gets to a point it becomes, tax deductible. But upon doing some research, I realized that there's actually an amount that you have to be bringing in order for that to occur. Is there any truth to that? I think it's around 15,000. That's what I came around. But is there any truth to that?
In order for you to get a tax break?
The tax break, yeah.
Okay. So when it comes to businesses, there's no cap on how much money you have to bring in order for you to get a tax break. Now, remember that the tax break that you get for a business is for that business. That's outside of your personal income or your wages, right? That's what it's called, your wages. So your expenses for the business is 100% tax deductible. So, for example, if let's say you have a barber and you're a barber, okay? What's going to happen is all the income that you get paid for cutting people's hair, that's your income. Now, when you drive to the person's house, you can expense that. The tools that you use, you can expense it. If the meals that you buy on your way to the person's house or when you take a break from when you're doing your barbering job, you can expense it. Your phone bill, your cell phone for people to call you for clients to call you to book appointments with you or for you to call people to do follow-up, you can expense all those things. So all those expenses are things that you can expense. Now, a lot of times what people do is you realize that your expenses is always greater than your income that you're bringing in from the business. So when that happens, you have a net operating loss. So what that net operating loss does is it carries over to your personal taxes, and then it's going to reduce your taxable income. So say from your regular job, your taxable income, your regular income is $50,000, and you have a net operating loss of $5,000 that's coming in. So now, if with all things being equal, if your taxable income was $50,000, you would subtract that $5,000 from it. So now your taxable income is $45,000 instead of $50,000. So to your question of there is a cap or there's a certain amount that you have to bring in, there's nowhere in the IRS code that says there's a certain amount that you have to bring in. However, you can't keep running a business at a loss forever. That's an IRS audit flag. And so if you are running your business at a loss for 2-3 years, that's fine. But once you hit 5 years upwards, then the IRS is going to start looking at you like, okay, why are you running a business that is at a loss every year? So then they realize that, okay, you're just trying to evade taxes. So that business might not be legit, and that's when you get audited. So to answer your question, there's no cap on how much money you have to bring in order for you to get a tax break. Whatever money that you bring in, you bring in. Whatever expenses that you expense, you expense. If your expenses is greater than your income, then you get a tax break as far as a reduction in your taxable income.
Okay, that helps. Thank you.
Okay, you're welcome.
I have another question. So do you have any advice for people who are not business minded? It's like, I mean, they don't want to start a new business. Like, business is not something that they like to do, Like, do you have any advice for them?
Yes. If you are a type of person that you are not interested in starting your own business, that is okay. In life, not everybody was created to start a business. Some people might start a business and it will fail. But what you do want to do is, if you don't want to start a business, you want to invest in a business. When we talk about buying stocks and buying bonds and, doing all these investment things, what that simply means is when you're buying a stock in a company, when you buy Walmart stock or Facebook stock, Walmart is owned by someone, and you are saying that I trust what Walmart is doing enough that I'm willing to put, $100 into Walmart in order to just get a piece of Walmart. So you are not running the everyday activity of Walmart. You're not the one that's, do any of those things. But what you're doing is you're putting in your money, and that money, somebody's working with the money, and you're getting interest or dividends on that money. So my advice to anybody who is on this call who might not be interested in starting your own business, you're not alone. You're not it's not abnormal for you to have that feeling. You know yourself better than anybody else. But what you don't want to do is just rely solely on the income that you're bringing in from your job, because that's not going to be sustainable. It's not going to help you save enough to get into that generational wealth conversation that we're having. So what you want to do is you want to look at other avenues. I don't want to start my own business, but I know somebody who's starting a business, and so I want to, maybe invest my time in it, or maybe I want to do a little bit of research to be a partner with that person. So you don't have to start your own business on your own, but you want to partner up some way, somehow with other businesses.
Thank you.
You're welcome.
I have a question. I'm sorry if you already addressed this, but then I was wondering who was eligible for Trump's stimulus check and the implications it's likely to have on their taxes.
Okay, so if you filed a 2018 or 2019 taxes, and as a single person, if your income is less than $75,000, then you're eligible for it. You get automatically that $1,200. If you are married and you filed married filing jointly, then your income has to be less than $150,000 for you to qualify for it. And each person on the taxes will also get $1,200. So if you're married, then you get $2,400. If you have children who are under the age of 18, then they also qualify for the $500 stimulus check. So $75,000 if you are single, $150,000 if you're married. That's how you qualify. If you Go ahead, Patricia.
Is it for citizens or like legal permanent residents, F1 status students, or
it's for
who
all
is it geared towards?
taxpayers.
Oh, for all taxpayers, okay.
It's for all taxpayers. So as long as you filed your taxes in 2018 or 2019, then you qualify for it. It doesn't matter if you're a citizen or if you're a permanent resident or if you're an F1 student. As long as you filed taxes, you worked, you paid taxes, and you filed taxes in 2018 or 2019, then yes, you qualify for it.
Okay. Thank you.
You're welcome. That's a really good question.
Hi, I also have a question about the tax refund.
So I think it's the last part of her question. I'm very sorry to interrupt, but I was interested in that part and finding out whether that part is tax deductible or how that's going to affect your taxes, that stimulus check.
Okay, so before we get to the person who is just asking that question, so let me just address that stimulus package question. The $1,200 is not taxable income. Initially, there were talks of it possibly being added into your 2020 taxes when you file early 2021, but it works just like how a refund works, right? So when you file your taxes and you're eligible for a tax refund, it's just a tax credit. So for this $1,200, you get it and that's it. You won't get a 1099-G, you won't get anything later to add it to your taxes, so it's not taxable income. Okay, does that help?
Yeah, it does. Thank you. And sorry to interrupt again.
You're welcome. I think there was a question.
Yeah, quick question, Lady Yeboah. My question has to do with investment. So say, I know we've spoken a little bit about stocks. Say you recently started investing in stocks. Are there any things to watch out for? Like, what would be the advice that you give to somebody who just recently started? I know also there are several platforms out there. Do you have a specific one that you advise us to use, if any?
Okay. So if you are interested in getting into stocks, if you're not a seasoned trader, you don't know what you're doing, there are different apps. So there's Robinhood, which I have. There's Acorns, which is really, really good. So there's several robo investing apps that are out there that you can use. Even I think Cash App is even doing investments, is doing stock options now. But my two top is Robinhood and Acorn, those two. As far as the price, when it comes to what kind of stocks you should be buying, is really you have to do your research, right? You want to make sure that you have to determine what kind of risk taker you are. If you are somebody who is you have a high risk tolerance, then maybe you might want to, spend more money. But if you have a low risk tolerance, then maybe you wouldn't want to spend as much money. So when it comes to the actual stocks that you're buying, you want to listen to the news, you want to read what's going on in the market. Now, let me give you guys this example. When Corona happened, when it first happened, I have a client who he's constantly buying stuff. So he called and said, "Hey, Abby, I'm going to buy face mask stocks." And later on, I called him. I was like, "Tell me the name of the company, like the company, the manufacturing company that you're buying your stocks from." And when he told me, and I went on there and I read how much their stocks used to be versus when I was looking at it, it had doubled in price, right? So whenever he bought it, he made, 100% on his investment. So you want to just think about things that are going on. Now, some of the industries that are very good to invest in is food. Food never goes away. So if you invest in the food company, that's always good. Manufacturing, that's something that's constantly, people are manufacturing things all the time. IT and communications, these are industries that are, really, really good that won't go away. So you just want to do your research and see what are the different industries that are booming right now. Right now, health is booming right now, right? Because there are all these biotechnology companies that are looking to, come up with this solution or a vaccine for this coronavirus. So everybody's in the lab that's working. So you want to look at all those different companies to see when it's when it comes to investment, it's a game, right? It's a win and lose kind of game. So you might have a good hunch about a certain company, you might invest in them and it might not do as well, or you might just, hit a really large break and invest in it and make money. But if you're starting out, just start small. Don't take like $1,000 and go and invest it. Start with 100, 200, get a Robinhood account, get an Acorns account, and start, looking at the different things. You can look at their watch list and see what's doing well and buy a few stocks and play around with it. Once you get to the point where you feel like you're ready, then you can go on to like bigger platforms like E-Trade and Ameritrade and those places and create an account with them. And those, I think you have to pay monthly in order to use those services. And that way you have bigger options versus the free ones on Robinhood. I hope that helps.
Okay. Thank you. It does. Thank you. My next question has to do with, is it always a good idea to buy a house, or sometimes it's wise to just rent?
It depends. It depends on your financial situation. So your question makes me want to ask you another question of why do you think, like, you have to give me a reason as to why you would think that renting over buying is always better, right? Or it might be better in this situation. Ultimately, owning your own home is always is better, because all the expenses that you might have in an apartment, you more than likely have those same expenses in a home. So I wouldn't tell you to go buy a 5-bedroom mansion if you are a single person. who just graduated from college, or maybe you just started with life and you've been working for a little bit, you saved a little bit of money. That wouldn't be a good financial investment, right? But if maybe you want to invest in a 2-bedroom, 3-bedroom condo, that makes more sense, because it would probably be, if not slightly larger than a 3-bedroom apartment. So as far as utilities and other things, you're probably in a better financial position when you own that home versus you paying rent in an apartment. So it all depends on your financial situation. If you've been able to save enough money for a down payment, I say go ahead and get a home. But if you think that you need to maybe get an apartment for a year or two in order to get your financial, to get in the right financial position before you buy a house, life is all about planning and having goals in sight. So if your goal is to buy a house in the next 2 years, then what am I doing now to get ready to buy that house? You need to make sure that you're able to save at least 20%, at least 20%, to take advantage of certain tax breaks. You want to make sure that you have enough money to, make your house look the way that you want it to be. So you just have to think about your financial situation to decide what's the best move for you.